What's up, guys? It's January 17th, 2025. Got a gap up and then sideways price action. We had the expected context. When we have a gap up, we can see a directional move within the first hour and a half of the day, and then we go sideways for the rest of the day. That's what we got today. Pretty interesting time in the markets. Yeah, we had that wedge bottom, and now that's breaking out. Usually, we can expect two legs with a wedge bottom. I remember I bought my options account got crushed. I was only enrolling like one options account, but one options contract. I bought this low here, or I bought one of these lows. It was very close to this low here, and this price action is what I thought we were gonna get right here, and I was in profits nicely right here. Then I remember just watching it melt away as my life faded from my eyes. Every mistake I made came back into my head and it got crushed, and now it rallied. I was already, it expired on the 10th, so I literally got stopped out at lows and it rallied to the same high. It is what it is. I'm still going to start another options account, just not yet. I'm going to practice a few more things on the 5 minute chart. And then yeah, it'll be fun. I'll probably trade the 45 minute chart honestly because yeah, it'll be the 45 minute chart's great for swinging. So if I was to swing a 45 minute option swing on this chart, I would be looking for a retest around yesterday's high, and then I'll swing it. Or if we sell off, I'm looking for a retest of this candle's low. So I'm kind of excited. I'm finally starting to feel the power of a fractal price action, and like how a system can just a good system trades any market, any time frame, any stock, Bitcoin or future or indices. So I'm starting to feel the juice. I like it. I like it a lot. You guys might see an indicator on my chart, and honestly, I've had this indicator for a year now. I was in Systems Academy, and one of my mentors gave it to the class. I always turn it off because I felt weird about it, but I mean, I'm out the class now. I can't share it with anyone, unfortunately, but we can still look at it. It's just a gap indicator. I draw the gaps in anyways. When I day trade, I have two charts open. I have one with I'm like marking it up, like okay, here's a measured move. I'm looking for a retest here. Here's a breakdown. I'm looking for a retest here, and then I have another chart, pretty much just like this without the date. And I get targets, and then I look here. So yeah, just letting you guys know if that I'm just gonna leave it up here because it'll be better for the breakdown, so we'll all benefit from it. So yeah, daily chart, 15 minute chart. 15 minute chart looks great. Leg one, pull back leg two, pull back leg three. We have a second leg trap, leg one, pull back leg two. Creates a wedge bottom. Really good buy signal at range lows here. I think this is a great buy signal, honestly. If this closed on its high and this tail was just a little bit shorter, I'd be like, wow. Nonetheless, I still rate it like if it was out of 10, I rate it like a 6 or 7 out of 10 because of not because of the way it looks, but because of the context. And the context is wedge bottom bull flag. Whoa, someone texted me for the first time in years. The context is wedge bottom bull flag. So really nice context. And yeah, it rallied. The market rallied. We didn't have the best follow through, but we had that bar from the other day, 60-point rally, went sideways. That's what we see right here. Rally, sell off. Ended up being a shallow pullback, and the bulls kept this gap open. It's a weak gap because it starts with a bear bar and ends with a bear bar. We like to see gaps that start with bull bars and end with bull bars, or like here, this is a good gap. Bear bar, bear bar, bear bar. So now we know there's the limit order bulls that bought this low are trapped. They're underwater. They're going to buy more. And that's what causes this impulse. An impulse is just a pullback for the bears. It's whatever's clever. 15-minute chart. We had the sell off here. Ding dong ding. Oh, if you guys join the Discord, my name is Ding Dong in there. So just know that because some people have been messaging me. They're like, "Are you the guy who owns Price Action Discord or Price Action Breakdowns?" I'm like, "Oh crap! People don't realize my name is Ding Dong in the Discord." So that's me. Leg one, pull back leg two, pull back leg three. After the third leg is range bound price action. Leg one, pull back leg two, pull back leg three. That's a wedge bottom and a bull flag. Deep pullback, range bound price action. We're looking for a breakout. We get a strong breakout this morning with these bars here. Rally, leg 1, opposite bar, pull back, leg 2, opposite bars, puts us into a trading range. We're looking for that leg 3. That leg 3 came right here because we traded one tick higher. So bulls met the minimum. Leg 1, pull back, leg 2, pull back, leg 3. Minimum is met. This creates range bound price action. Then we get a gorgeous breakout. I was at work today, so I didn't really get to participate. I caught like a 5-point scalp. I just bought one of these bars. I think I bought this high and held it. I just got out here for like 5 points. I was like, well, that's annoying. Well, I guess it was 7 because I do remember getting out before 15. I bought this high. I think I made 5, but I guess it says 7. Yeah. I was trading on my phone, so there's probably some lag between the like flipping between the app. So where are we? We have a gorgeous breakout out of this bull flag, trapping bears. So here's a good example of a gap because it starts with a bull bar, ends with a bull bar. Gap, and we have multiple gaps in a row, so we can just count this as one big gap. Count this as one big gap. So what do I mean by that? I mean by this. Just like that. So we can count this as one big gap, but nonetheless it's 3 gaps. Rally. This bar is testing this bar. I think this is a great buy. Why is this a good buy? Well, the context, it's a bear bar closing on its low. This reversal bar got follow through. Why not short this bar? Because the context is we've had 1, 2, 3, 4, 5 bear bull bars after a breakout. So prior to these bull bars, we had a bull rally. So the gunshot idea, you shoot a bullet into a box and then you shoot it out, same momentum. So we got momentum, we got bullish momentum, we have a bull flag, we have a strong breakout, we have a reversal bar at highs with follow through. And I think that's what makes the trend so great, is because people are going to short this and they're forced to buy back their shorts, or the strong hands will short higher and get out for a quick scalp. Nonetheless, when they get out, bears are buying back shorts. So bulls buy lows and bears buy back shorts. That causes a rally. Leg 1, pull back leg 2, pull back leg 3, puts us in range bound price action, and that's exactly what we see here, sideways price action. Let's talk about this real quick because we're about to zoom in on the 5-minute. So this is a 15-minute chart. Leg 1, pull back leg 2, pull back leg 3, pull back. Did I count that right? Leg 1, pull back leg 2, pull back leg 3, pull back leg 4. Yeah. So inside, that's not an inside bar, but it's a pause bar. I want to see something here. We're going to do some fractillion. Is that even a word? So this is what we just looked at. Ding, dong, ding, dong. I wanted to count the legs. And yeah, look at that. 3 legs. Leg 1, pull back. Leg 2, pull back. Leg 3, pull back. Deep pull back. Leg 4, position in trading range. I don't know. Oh, now I'm stretching here. Let me see something. Okay, I copy and pasted it. That's cool. So that's exactly what we just saw. 5-minute here. Leg 1, pull back. Leg 2, pull back. Leg 3. Leg 1, pull back. Leg 2, pull back. Leg 3. This was its own leg here. There's a small pullback right here. What pullback is this? When I'm trading, I'm never looking at multiple charts. I glance at the daily time frame, see if we're coming into some whatever's clever, but I'm staring at the 5-minute. We're gonna go reverse because I want to see this pullback on the 5-minute. Okay, this is cool. This is actually really cool. You guys get it? So this square is this pullback. So now we can see it. We can see it. So we see so let's just do it again. These 3 bars, copy, paste. Okay. So we're off. So okay, so those 3 bars start from here and go here. And then this bull bar, I might be making this more complicated. It might be easier to have them side by side, but I kind of like it like this. Is these 3 bars that rally. So now we've got and then just to be complete, let's do the last bar. That's okay. So 15 minutes means 3 bars here, 3 bars here, because it's 15 minutes. these 3 bars here. Wow, this is tight. I'm definitely gonna want to make a slide of this. I'll do it again and I'm gonna like color code it. This is cool. Show you guys see this box here is this leg here. I changed the sizes so I could fix the size later, but you guys get it, right? So this is a leg, this is a leg, this is a pullback, and that's a leg. So that's the 5-minute. Onto the 15-minute. We usually look at 5 minutes onto the lower time frame, 1 minute. This is something just my mind just expanded in a fractal way. We're 10 minutes into the breakdown. We haven't even got started, so let's do it. We got a 60-point gap up, if I think that's correct. 60, but then the bear bar closed on here, so 67-point gap up from lower bear bar to high bear bar. When we have a big gap up, we can expect a directional move within the first hour and then sideways price action for the rest of the day, and that's exactly what we got here today. Big gap up, bulls are in control. Bad follow through. Bar 1 is a bear bar. Bar 2 is follow through for the bears. Bar 3 is a pause bar for the bears. Bad for the bears, good for the bulls. We got a gap up. This is creating a wedge bottom after a bull bar. So this gap up is a bull bar. Leg 1, pull back leg 2, pull back leg 3. Wedge bottom as a breakout rallies. You can take that first scalp back to range high. And then bears, this is showing up for its own second leg. So they get that. But the minimum is not met. The minimum for this leg is 1 tick below bar 3, and that's not met. Bulls, however, get their minimum, leg 1, pull back leg 2. Shallow leg, pull back, deep pull back leg 3. Deep pullbacks in leg 3s. It works on all things, right? Here was leg 3, we got a deep pullback. Here is leg 3, we got a deep pullback. Market's range bound, it's breakout mode, and we rally for another 3 bars. We just talked about these bars on the 15-minute. Leg 1, pull back, leg 2, pull back, leg 3. After leg 2, it puts us into a trading. After any leg past leg 2, the probabilities for trading range significantly go up. So I just think like, okay, if it's not a leg 2, it's a trading range. However, just because we're in a trading range doesn't mean reversals. This whole leg's showing up to get its own second leg, and it does that right here with this rally. This is a leg 4 rally. Leg 1, pull back leg 2, pull back leg 3, deep pull back leg 4. And that leg 4 rally showing up to get its own second leg, and it does. Leg 1, pull back to low 42, leg 3. So you have to really think about context. We had a big gap up with follow through eventually. I mean, not the best start to the day. The bears had controlled the day. I think that's what caused the selling because there's trap bears. And when you have a big gap up, bears are shorting bull bars. That's range bound price action. But it's all context based, right? So let's look at this leg. This leg has multiple gaps. It has bull bars closing on their highs, lots of tails. So that's not good. But then this rally has 3 bars in a row. So we'll take the idea of one big gap. And that's a big gap. And then this big gap gets tested quite a few times. 38, 42, 41. 40, what the hell? 38, 42, 43. And then I don't know why I said 41 right there. And then it rallies. And then now that puts us into a big leg 3. Leg 1, pull back, leg 2, pull back, leg 3. Wedge top in a trading range. Why is it a trading range? Because they're selling down here. Bears made money here. Past leg 2 is a leg 3, leg 4 for trading range. The probabilities for trading range significantly go up. And I'm going to repeat that 1,000 million trillion times because I need it to be ingrained in my head and ingrained in your heads. So, because I guarantee you guys go back and look at your losers, your with trend losers, and they're in late legs. But then again, it's back to context. We had enough momentum in this leg for a quick scalp. Bad follow through, high 1 in a trading range in the leg 3. Leg 1, pull back leg 2, pull back leg 3. Bar 47 is a high 1 in a trading range. Bears start shorting that. More sellers. There are more sellers in the trading range. When you have a high 1, there's more sellers in the leg 3. I said that backwards. When you have a leg 3 in a trading range, there's more sellers above the high 1. When you have a leg 3 in a bear trend and you have a low 1, there's going to be more buyers. So this is a high one, bar 47, and it sells off. We sell off for the rest of the day, 47, 48. Good bear bar, strong enough to get its own second leg. Bearish short 48, make 1R very quickly. Deep pullback, trading range price action, deep pullback. 51 breaks out below the EMA. I was watching this, and I really thought we would rally. I thought we'd close at highs, but you know, this price action down here caused the expanding, whatever the hell the bears want to call that, triangle. 3 pushes down, like 1, pull back, like 2, pull back, like 3. Are you guys noticing? No matter what the situation is, I'm basing it on a market cycle and leg count. These two things are fractal. These two things are forever. You can't, no matter what chart it is, no matter what time frame, you're gonna see what I'm talking about. And I think that's really important, to turn a complex subject simple. That's how we make money. You don't make money by making things complicated. That makes things hard. You want it simple. Leg 3, leg 4, high ones. I don't do this. If you're a mean reversion trader, which is totally fine, fade it. If you're a with trend trader, hey, recognize 12, 13, 14 is strong enough to get its own second leg. 15, bad sell signal, buy that. Hey, we're in a trading range. Leg 1, pull back leg 2, pull back leg 3. You see this, you acknowledge we're in a trading range, put a limit order there. Take it for 2 legs lower. This is a bull flag. Leg 1, pull back leg 2, pull back leg 3. If you're gonna short in a bull trend, you got to be disciplined and scalp out, and it's got to be in trending range behavior, because you could this could have snapped against you. This is the harder trade, if you ask me. The easier trade is to buy this low, is to buy that high, and catch the next rally. This is the first touch over 20 bars, so the first touch of the EMA is a good buy. That's Al Brooks 101. Yeah, so let's get back to this thing. I'm yapping away. Good breakout, deep pullback 52, and then we have a lot of overlap here. 56, 50, 58 hits support, and we strong bull bar. In trading ranges, breakout bars. So if 58 was a breakout bar, it's actually a vacuum. Trading ranges, we have bars that look like vacuums. They look great, and you're going to get trapped. Bulls that bought this were eager to buy the breakout, with failing to realize what the leg count was and what this leg did to the price action position in a trading range. This is a buy vacuum. Bar 59 is a short. It's a hard short. However, if you realize it's testing this breakout point, you might be able to short. You could short the high or short 60, and then you catch another 2 legs down and make a significant amount of points. This is actually 3 legs down. Leg 1, pull back, leg 2, pull back, leg 3. 67 is the biggest bear bar so far. Late, leg 1, pull back, leg 2, pull back, leg 3. It's late, so it's climactic. Take profits here, and if you see 68, you definitely gotta take profits. Bulls got a wedge top into the bull flat, into the EMA. Leg 1, pull back, leg 2, pull back, leg 3, and then it sells off EOD. Strong selling, at the bar 72. If you're not profitable, call it quits, guys. You got no chance. You're gambling at that point. We could look into the 1 minute time frame, but I kind of went with the higher time frames today. Let's just take a peek. See, I did not mean to do that, because we still have to talk about the microchannel. Microchannels, yeah. Woo. Here's one leg we're gonna look at. Here's another leg we're gonna look at. Here's another leg we're gonna look at. I'm trying to make sure we don't lose our place here. It'll make sense in 13 seconds. Someone set the timer. They used to call me Speed McQueen back in the day. I don't know if you guys remember that. No one's ever called me Speed McQueen. I could not even run a mile. I was so slow at PT. I hate running. I'm not. Never mind. Okay, so now let's go to 1 minute. So now we see the legs. These are the bull legs we're examining. And each of these legs have smaller legs. So real quick, back to the 5 minute. See these? This is what we're looking at. Leg 1, pull back leg 2, pull back leg 3, sideways. Leg 1, pull back leg 2, pull back leg 3, sideways. Leg 1, pull back leg 2, pull back leg 3. Leg 1, pull back leg 2, pull back leg 3. What the hell? Leg 1, pull back. Leg 2, pull back. Leg 3, sideways price action. We can still see this is an inverted box. I just made that up. leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. So that's what we're going to look at. I think I found a new way. I like numbering these boxes. It makes things easier. So we have 3 legs here, right? Leg 1, pull back, leg 2, pull back, leg 3. See how it's the same setup? Wedge bottom into the EMA, breakout. Bar 61 is the first pullback. Leg 1, pull back, leg 2, pull back, leg 3. Deep pullback because we're in training range past leg 3, and then we rally leg 1, pull back, leg 2, pull back, leg 3. Deep pullback, training range, we go more sideways. This is all one big flag going sideways. This is the 4 dojis I had trouble counting a second ago. It has a bullish breakout. Leg 1, pull back, leg 2. We're in a training range, second leg trap. These bars, 115, 116, 117, are the nicest looking bull bars in this entire trend, excluding the beginning bars, right? So this is early in the trend, nice looking bars. Late in the trend, nice looking bars, climactic behavior. Bears get 2 legs lower into the EMA, the inverted box. Leg 1, pull back, leg 2. And we go more sideways, second leg trap. The wedge bottom here, leg 1, pull back, leg 2, pull back, leg 3. Testing support, and this starts that late leg 4 rally. Leg 1, pull back, leg 2, pull back, leg 3. I jiffied that. Leg 1, pull back, leg 2, pull back, leg 3, sideways. Leg 4, we go more sideways. This whole leg 4 is trying to get its own second leg, but we have to expect a delayed second leg because we're in training range. Leg 1, pull back, delayed second leg, leg 2. The delayed second leg has its own set of 3 legs. Leg 1, pull back, leg 2, pull back, leg 3, sideways price action, and we get out to the sell. The sell was very hard. It had a lot of overlap. We were talking about that a little bit. So now we're looking right here. Overlap city. You guys should avoid overlap city. Trending city is a lot more fun. Look at that. That's his hard price action, but on the 5-minute it kind of smooths out, and on the 15-minute it is just a bear bars closing in the midpoint. We'll look at this price action right here. So this is the 1-minute to the 15-minute now. And all these bars are closing in their midpoint. I'm definitely past the 20-minute mark, so I'm going to speed this up a little bit, guys. So we get a lot of overlap. It's sell the EMA, sell out, or mean reversion back into the EMA. I stay away from mean reversions at the moment, but definitely viable. You can make money doing either one. Mean reversion is part of first principles, so it's acceptable to trade mean reversions. I don't do it. Leg 1, pull back, leg 2. Leg 1, pull back, leg 2, pull back, leg 3. Different types of ways to count. Leg 1, pull back, leg 2. 279 goes 1 tick past. Leg 1, pull back, leg 2, pull back, leg 3. Wedge bottom gets a rally, 291, 295. Trying to get its own second leg, but it doesn't. This bar doesn't get. This is that big bull bar. Remember that I was saying, hey, this is actually just testing the breakout point. Weak hands are going to buy this. Strong hands will sell the pop because now they recognize we're in a training range. This is trying to get its own second leg, and that happens here. Bar 30 was that. Bar 331 is climactic. We see that. Big down, big up, and we go super sideways for the rest of the day. Let's just very quickly draw in these micro channels. I want you guys to see the measured moves, and then we're going to call it good. We're going to put a ribbon on it. So morning range, I don't trade morning range breakouts, but it did not get 1-to-1. It did not. Big gap up, put a dampener on how much range we're going to get today. So 1-to-1 failed, but for sure the bodies were met 1-to-1. 1.5 hours met with the bodies. That's great for those traders who trade the orb. I don't do that, so we're not going to talk about it. 3-bar microchannel, pull back. 1-to-1s met here. About 24 is climactic. Bad follow through. 23 is a big bull bar at the late in the trend after 3 visible legs. A visible leg is the legs we can see. Implied legs are legs we can't see. This is an implied leg. This is an implied leg. Bar 15 is a visible pullback. This is an implied pullback. Bar 19 is a visible pullback. You guys get the flow? I almost said capiche, but I'm not Italian. Trying to get its own second leg. Put it here. Maybe you want to trade the stop order because now it's you want to see a good close in case we start to sell off, and that's acceptable. 1-to-1's met there. This is where things get tricky. We're in the fourth leg now. you're not going to get your 1-to-1. You got to scalp out when you get past the minimum. The minimum for any leg is 1 tick past the prior leg. These 3 bars trying to get its own second leg. I trade 3-bar microchannels. So why did I just put 49 into this mix? Because that's a bear bar. So here, let's do it like this. You see? You couldn't see on the 5-minute, but there is 3 bear bars in a row right here. That's an inside. That's not an inside bar. That's barely an inside bar. It meets the minimum requirement for an inside bar. So although on the 5-minute, it's a bull bar, and it painted a bull bar for sure. It's still a bear bar in my picture, in my eyes. So that's 3 bear bars. Short the pop 52. That's a hard sell. I can see if you want to short 51, you're gonna have to sit through a pullback and scalp out very quickly. You're gonna be in the red a little bit. But if you can sit through the pullback here because you recognize it's just a test, it's just a vacuum test, you'll make your money. You'll make your 1.5 bar. Another 3 bars, 4 bars in a row. Weak signal 66. Short it, you make 1-to-1 in 1 bar. That's why profits were taken. Or when a trader makes 1-to-1 very fast, they're gonna take profits. So this bar, these bears made 1-to-1 very fast. They took profits, and then we go more sideways. You could trade past that. Anyways, guys, I hope you have a good one. Hope you guys have a good weekend. I was yapping all day today. Hope you guys made money. If you learned something, share the show. Drop some comments. Let me know if this made sense to you. If you want to learn more about lower time frame, higher time frame connections, I think it's really important to see it on the 5-minute. After hours, we go and look at it. 5-minute, we're just using our trader's imagination. Hope you guys have a good one. Thank you for tuning in. As always, I appreciate your support. I appreciate all the talk in the Discord. I'll talk to you guys. Got a busy weekend. I'll talk to you guys on Monday. We have Mondays off, so I might have a video in the vault I've been wanting to post. Maybe I'll post that. Well, I'll think about it. I'll talk to you guys if not on Tuesday and in the Discord. Discord link is in the comments. My name is Ding Dong. You guys have a good one. I'll talk to you later. Bye.